Hey everybody, what's going on? It is James here with Crypto Common Sense, and in this video, we're going to talk about how you can generate income through options trading. This can work in cryptocurrency if you're in a geographic location that allows you to trade options on crypto. If you're in the US, this is going to be better suited for trading stocks. And what I wanted to do in this video was really break down the mechanics, because most people are naive, and that's not an insult. It's just that's where everybody starts at. We're naive and ignorant. We don't know about topics. We don't know what questions to ask. And so I wanted to shoot this video and kind of walk through some of the simpler ways you can trade options. And so I'm going to use NEO as an example. There's nothing special about NEO. It just happens to be a stock that I've traded, thousands of times. I figured I'd just use it. I don't currently have any positions on NEO. So before I jump into the content for this video, make sure you hit the thumbs up button, make sure you subscribe to the channel, and of course, make sure you click that bell icon to get notifications when I release new updates. I really don't pay attention to vanity numbers like subscriber count, follower count, group size. I don't pay any attention to this stuff because I do all of the training stuff really for fun and as a hobby. But I did notice that we're coming up on 4,000 subscribers on the YouTube channel. So when we get there, I will probably do something special. I don't know what exactly. I'll probably have some kind of giveaway. Maybe I'll buy a couple of silver rounds or something and throw out some silver. Or maybe I'll give away some crypto or something. So make sure you subscribe. You'll have to be a subscriber in order to get notified when I do that. So let's take a look here. We have NEO. Obviously, this is a weekly chart. I'm talking about generating income. So one of the ways that professional traders generate passive income is they sell covered calls. And what a covered call is actually a call where you own the underlying stock. So let me kind of break this down in detail. Let's say, for example, that I have 100 shares of NEO, or I want to own 100 shares of NEO. Right now, NEO is trading at $20.92. So if I was to buy 100 shares of NEO, of course, that would cost me roughly $2,092. Might be a little slippage, whatnot, but we're going to call it $2,092. So now I own 100 shares of NEO, but I'm exposed to the market. I'm obviously not generating income simply by holding these shares of stock, unless it's a dividend stock, which is a little different. So how do I make income off of these shares without actually trading the shares? Well, I do that by selling a call. If we jump over to Robinhood, I'm just using Robinhood because they have a fairly friendly user interface. I don't really trade a lot of options here. I do all of my serious trading on TD Ameritrade. But if we look at NEO, we can see that these are calls, right? We have calls selected. We have sell selected. We would sell the call, which, by the way, you never want to sell a naked call. You want to make sure if you're selling a call, you actually own the underlying stock in case it goes way up. You want to own that stock. And we can see that for a call expiring on August 12th, which is tomorrow, if I wanted to sell a $21 call, somebody is willing to pay me 31 cents a share, now 32 cents a share. That means that on 100 shares, I would make 31 bucks. So here's what happens. If I sell this call and I own this stock, and that stock is above $21, then tomorrow, when that call expires, the person who owns that call is probably going to exercise it. That means they're going to buy my 100 shares of stock for $21, which is fine with me because I only pay $20.92, but I'm also going to get to keep that $31 premium that they paid me for the call. And so you can see I actually make about 30 or 40 bucks on that. But there are other ways to do that. If I'm looking for longer term trades, longer term passive income, I might say, you know what, I'm not interested in what the stock is going to be priced at tomorrow. I'm going to go out a few months. I might go out to the end of the year, for example. So we can go out to December 16th. And now a $22 call is selling for $3 a share, which is $300. So if I buy 100 shares of NEO, and it can cost me roughly $2,092, and then I sell a call, what that means is if price is above $22 on December 16th, somebody's going to exercise this call, and I'm going to have to sell them my shares, which is perfectly fine because that's more than I paid for them. I make a little over $1 a share, plus I would get to keep this $3 per share. So I'd actually make right at $400, which is perfectly fine. That would be a great return on my investment. If NEO starts to fall in price and it's not at least $22 by December, that call is going to expire worthless, which is also fine. My stock may go down in value, but I'm still going to get to keep this $3 per share or $300. That's mine forever. Now, when you first start out, it might seem a little bit scary because you're like, yeah, but what if it goes down, $5 or $6 or $8? In which case you would actually be in the hole because you only got $3. That's fine because you would just turn around and you could, after this expired, sell another call. So for example, I have certain shares of stock that I bought specifically to sell calls on. And every time the calls expire, I just sell new calls and I do it over and over and over again. The shares of stock are actually worth about 40% less than I paid for them. But at this point, I've made hundreds of percent return just through selling calls over and over on that stock. And so it's just a nice little passive income stream. And the further we go out with our options, the more expensive they get. So for example, if we said, hey, look, we will sell a January 2024 call, which of course is, more than a year from now, that $22.50 call is $6.25 a share. So let's look at this. $6.25 a share, $22.50. Well, we just say $6.50 a share. Had to double check. So we would get $6.25 a share premium. That's ours to keep no matter what happens. And if the stock was above $22.50 a share in January of 2024, then somebody would exercise that contract and we'd have to share our stock, which is fine because that means we get $2,250 for stock. We only paid $2,092 for. So we make a profit there. Plus down here, we get to keep this premium. 625 times 100 shares, $625. So if you do the math, right, 2250 minus 2092, it's $158 profit on 100 shares plus $625 for the premium. That's a total profit. I'm doing the math in my head, so hopefully this is right. $783. That look right? 775. Yeah, I think that's right. Right. So $783 profit on a $2,092 position. I don't know about you, but I consider that a really, really good return. Like extraordinarily good. You were talking about a return of over 30% in a little over a year. Very low risk, right? Your actual risk here, if you paid $20.92 a share, $20.94 now, and you got $6.25 in premium, your net cost for shares of that stock is down around $14 to $15. Now, in the case of NEO, it might actually fall further than that. I mean, if you look down here, it might actually go to $4 or $5. But again, even if that happened, you would get to keep the $6.25 premium, and then you could just turn around if it expired worthless and sell a new call, and you might get another $5 or $6 a share for the new call. And if that expired worthless, you could turn around and sell another one and get another $5 or $6 for that call. The real trick is trying to find the sweet spot in the price of the option and the time out. And if you use a little bit of technical analysis, it can really help because you might time this and say, well, I'm going to get $3 for this option that expires in 4 months. And then I'll turn around, I'll be able to sell another option that expires a couple months from that for another $3 or $4, and another option, a couple months from that for $3 or $4. And you just have these little assets that you're selling calls on. And this is, in fact, one of the strategies that Warren Buffett uses. Warren Buffett's a big fan of selling these covered calls, from my understanding. Obviously, I've never spoke to Warren Buffett, but this is something I remember reading about years ago, that Warren Buffett liked covered calls. It's a very passive strategy. You buy the stock and then you sell the calls. So the question comes up, well, if it's so easy and it's so great, why isn't everybody doing it? I think what it really comes down to is, number one, people want something, they want instant gratification, and this is not an instant gratification sort of thing. You can see that, I'm buying stock in some cases and selling calls for 6 and 12 months out into the future. In fact, some of the stock that I actually own, I've sold calls for 2024 on. So we're talking more than 12 months into the future. That's one thing. And the other thing is it does take a little bit of capital because your capital is locked up. If you've got $2,000 invested in NEO, right, and you sold calls on that, that's $2,000 that you don't have to trade with or that you don't have to invest with. And so those are things worth considering. So options are a fascinating world. And one of the great things about options, it's something that can be done around a full-time job or a business very, very easily, because you can go look at a weekly chart on options. You can sit down on a Sunday night or a Sunday evening, for example, go through different charts, run down a list of charts that you're interested in, find the charts that look like they're, putting in some kind of setup that they might be going higher, they might be going lower, and then you can, go ahead and get into those options on Monday morning, and then you might not look at it again, until the following weekend to see where your positions currently sit at. Because again, your risk is automatically limited when you trade options the right way. So if you'd like to learn more about options, I'll drop a link down in the description of this video. That'll give you an opportunity to join my premium training, which includes training on options. And should you choose to join that training, you'll also get access to my private Discord and my proprietary trade indicators, which of course can be very helpful when choosing whether to enter into a new position or exit an existing position. As always, please remember that I am just some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. This is James with Crypto Common Sense reminding you to please trade safe. I'll talk to you soon.